All right. Good morning, good afternoon, good evening to you, wherever you are in this beautiful world. Welcome to our Inner Circle Live pre-New York session. I'm your host, Ryan Carthage, joined by my awesome partner, Mr. Benny Allen. Hope everybody's doing well today on this beautiful Wednesday. As always, let's try not to fall distractions, grab a pen and paper, let's take lots of notes. Let's make sure that we participate and engage. And as always, I want to start our day off by taking massive action. That action stands for accepting all possible losses before entering a trade, preparing for any outcome, centering yourself, body, mind, and spirit, ensuring a balanced approach to trading, trusting education, strategy, trade skills, and intuition. Imagine your trade success materializing, obeying your trading strategy, avoiding decisions based on greed or fear, and never looking back or stopping until your trade has commenced. All right. So let's uh let's get to it, right? We'll take a look at the fundamentals, see what's happening across the market, and we're going to dive into uh, Taiwan semiconductors. All right. Um, so uh, let's hop over and let's get to it. All right. Let's go here, trading economics. Let's see what we've got. Boom. So European shares rise. European stocks advanced on Wednesday. Stocks 50 up 0.5, Stocks 600 up 0.3 as investors await progress in trade talks between the U.S. Key trading partner, while closely watching the ECB forum for signals on the central bank's policy outlook for the remainder of the year. Right, so trade talks are moving along with Donald Trump in the Eurozone. Okay. Um, So positive sign coming out of Europe. You got also in the Eurozone, jobless rate edges up from a record low. Unemployment rate in the Eurozone rose to 6.3% in May 2025 from a record low of 6.2, above the market expectation of above the market expectation of 6.2. The number of unemployed individuals increased by 54,000 from the prior month of 10.8 million. Meanwhile, youth unemployment rate, reflecting those under 25 seeking employment, went up to 14.4% from a downwardly revised 14.4 in the prior month. Um, yeah, so employment rate on the move to the upside. Excuse me. Oil. Brent crude futures hovered around 67 per barrel on Wednesday as investors tread cautiously ahead of OPEC Plus output decision. The group is set to raise production by 411,000 barrels per day in August, bringing the 2025 total increase to 1.78 million barrels per day, um, over 1.5% of global demand. This move is seen as both a penalty for overproducers and a bid by Saudi Arabia to regain market share from U.S. shale and others. Meanwhile, an industrial report showed an unexpected rise in U.S. crude inventories, with API data revealing 0.68 million barrel increase last week, breaking a 4-week streak of declines and defying expectations of a 2.2 million barrel drop. Interesting. Um, Geopolitical tensions have also eased as Israel and Iran ceasefire holds, reducing oil's risk premium, while uncertainty over potential U.S. tariffs after the July 9th deadline continues to cloud the market outlook and add pressure on prices. So we got some pressure on both sides there. So we'll continue to watch oil. we'll continue to watch oil, right, and see how things continue to move. In the Middle East, things are still touch and go, even though Iran doesn't believe that Israel will continue to hold that ceasefire. And at the same time, Israel is trying to lobby China to to negotiate with Iran on their nuclear programs. So um, that's what's also happening in the background that isn't listed here in this note. All right. So that's oil. You got the dollar. US dollar index held at 96 on Wednesday, hovering at its lowest level in nearly 3.5 years, as dovish Federal Reserve expectations and concerns over President Donald Trump's fiscal policy weigh on the currency. Fed Chair Jerome Powell reiterated on Tuesday that the central bank remains patient regarding further interest rate cuts, but did not rule out a reduction at this month's meeting. All right, tons of pressure on Powell to make a cut in July. Um, and this bill, as it's trying to move through the House, doesn't help. Um, he also emphasized that future moves will depend on incoming data. He also noted that would have the Fed would have already cut were it not for inflationary impact of Trump's tariffs. Um, his little jab. Meanwhile, Senate nearly approved the tax spending bill, which is projected to add 3.3 trillion to the national debt, sending the measure back to the House for final approval. Investors are now awaiting ADP's payroll report due on Wednesday and closely watching the jobs numbers report on Thursday for further insight into the labor market. Right. So we talked about yesterday the day the week getting busy as we go into our normal beginning of the month reports. Right. So jobs definitely going to be at the forefront also. All right. Uh, ba, ba, ba. So that's what we have on the front there. Over to the calendar for today, right? We're just watching this ADP number here. ADP number, you got challenger job cuts also that could give some additional insight. The manufacturing PMI, Christine Lagarde and oil inventories. Okay, so got a few things happening today. We'll keep our eyes on as we slide through. All right. Benny, good morning, bro.
Good morning, Ryan. Good morning, everybody. How are you, sir?
I'm doing well, man. Yourself?
Doing pretty good, man.
Awesome. Awesome. Anything top of mind for you today, bro?
Yeah, so Bloomberg, Goldman traders say stock rally to go on before fading in August. So um,
Mm,
it has here the S&P is expected to continue its rally this month, driven by improving liquidity, collapsing volatility, fading recession fears, and seasonal factors before losing steam in August. Historical data suggests the S&P 500 tends to perform well in July, with an average return of 1.67% since 1928. And the first 2 weeks of the month are typically the best for stocks. Despite the expected rally, risks remain, including narrow market breadth, outperformance of low quality areas, and potential profit taking risk, with several high profile economic data releases looming. So, historically, it's a good month, especially the first 2 weeks. But we'll see. We'll see. All things considered, right?
right, right, right.
So we'll see if that trend continues. But as always, to look at things from a historical perspective. Um, but also keeping in mind every year is unique, right? It has some unique things, but it typically holds pretty firm, but we'll see. So that's the main thing that I'm seeing today. As you know, wake up and see what's going on every morning. Of course, Tesla shares took a hit. Um, as Elon, but that's one that I've had on my been following on my charts, it's in a correction phase anyway, right?
Yep.
So you're talking about it's in that B to C correction phase for Tesla. It is dropping on the 1 hour where I'm following it. Um, it's right below that 61.8. So it's made a nice correction. So hey, do with it what you must with Tesla, but
Listen,
it's giving us the correction that we're looking for. We'll see how it recovers. But that's it so far.
I appreciate you, bro. And
Yep.
so on that Tesla note, I don't know if I have my full markup here, but I am all I don't have my full markup here, but I'm looking for low prices to buy. And so this is what Ben is talking about here. That's what Ben is talking about right there. Right? I don't have a full markup here, but low price. And I'm long term, I'm buying Tesla. So great call on that, bro. Appreciate that data from Bloomberg too.
No doubt.
Gives us a good insight on kind of as we're looking at the markets, seeing how things could flow in that ABCD wave from a higher, longer term perspective, and from a historical, cyclical perspective as well. So appreciate that, man.
Yeah.
Team, you guys got anything fundamentally that you want to put on the table? Questions? No? All right, cool deal. We'll take a look at the dollar real quick, and then we're gonna dive into Taiwan semiconductors. Um, we noted, right, the dollar holding at this low level, this retracement that is giving. Down here, right? Starting to pull back a little bit, but as expected, right? And so we're looking at this 96,665 previous support. Look for that to hold as future resistance. And then we'll look for that continuation to the downside. We got stochastic in the buy zone right now, right? With the price being oversold, been moving down for a while. And so pullback makes sense. Okay. Here on the 4, right? You see that pullback happening there. And then on the 1, we will track that move. We'll run a subfib off the C just to track that smaller wave to the downside, like that there, right? And you got an 80-20 happening um, with those subfibs, right? So retracement makes sense. And coming back, retesting this previous support zone here, right? Around that 382 level. Maybe to push deeper, we'll see, right? But retracement and then continuation to the downside. All right, boom. That's what we're looking for on the dollar. All right. Any questions there before we dive into this breakdown?
No, sir.
No? All right. Cool. Let's do it.
Did you get my message in the chat, Ryan?
Yes, sir, I did. I think I
Okay.
responded to you.
Okay. Okay. Just
Appreciate
double
you.
checking in. Yep. No
All right.
doubt.
So, Taiwan semiconductors, right? Deep dive analysis. Um, so our agenda today, right? We're gonna dive through everything on Taiwan semiconductors, right? Excuse me. It's really important to recognize the importance of this company within the global semiconductor landscape, right? With advancements in all types of technology and increasing demand for semiconductors as we continue to dive deeper into the space of artificial intelligence. Um, the demand is increasing for semiconductor solutions, right? Understanding that this market is crucial for all investors, right? As a long-term kind of stakeholder in a portfolio, um, be it Taiwan Semiconductors or any other. But the primary focus here is on providing a comprehensive insight, right, into this organization, right? The company stands at the forefront of the semiconductor manufacturing, and its financial health is indicative of broader industry trends, right? And so we'll break down key components as we explore all the details, um, and we'll go from there. All right. So company overview, financial performance, return on equity breakdown, right? Evaluation metrics, risk factors, future outlook, portfolio theory, right? A thesis on the investment here, and then investment recommendations and summary, and then we'll open up for Q&A. All right. So, company overview. Um, so let's dive into this fascinating world, right? This company is not just a participant in this industry; it's the world's largest independent foundry, a title it's held since the very beginning of its journey, right? Taiwan Semiconductor, their position as an industry leader, it's not a coincidence. It's a commitment to advanced manufacturing technology, and uh, it enables it to produce high performance chips that power a vast array of devices globally, right? This technology, their technological edge is really crucial, especially in an era where performance and efficiency are non-negotiable and becoming more and more important when it comes to the amount of energy and data that needs to be processed at one time, right? Um, significant factor in uh, TSMC's success is its ability to forge strong global partnerships. By collaborating with numerous technology companies, they've been able to create a resilient ecosystem that not only supports semiconductor production, but also drives innovation across various sectors, right? When you look at NVIDIA and some of the other larger companies, they're able to continue to assist them in pushing forward, right? Even in the automotive space, the this interconnectedness is extremely vital as it allows TSMC to stay ahead of market demands and technological advances. Um, they're extremely committed to innovation, and that commitment is reflected in their substantial investment in research and development, right? The focus on next generation technologies ensures that it maintains its competitive edge. So that allows it to adapt and thrive, even even as the market dynamics continue to evolve. So as we transition into a broader context for the semiconductor foundry market, we'll explore key trends and growth factors that are shaping the industry, right? We'll examine market size, Taiwan Semiconductor's market share relative to its competitors, and various sectors that are driving demand for semiconductors, right? Additionally, we'll look at some of the challenges that are faced also, right? So we get a full view of what's happening and some of the drivers on both sides from a bullish and from a dovish perspective, right? So some of the challenges faced by the industry, and some of those challenges include some supply chain issues, right? Geopolitical risks. Um, in this context will help us to appreciate their strategic planning and their capital expenditure plans that are aimed at expanding capacity, right, to meet the demand of this global growth. So, industry context, okay? Industry context. Uh, as we dive into the dynamics of this market, it's crucial to recognize um, the impact that they've had in this sector, uh, and, and the impact on various industries and technologies and technological advances, right? Um, and not just a cornerstone of the technology, right? But it's positioned as significant position for significant growth um, within projected value of 120 billion in 2020. That was in 2024, and an impressive compound annual growth rate of 8% through 2030. Right? Compound annual growth rate of 8% through 2030. Right? That's insane. Right? So first we'll look at market size and growth. The ongoing transformation in technology speaks volumes about the demand for semiconductors, right? This growth trajectory is fueled by several key sectors, right? Particularly artificial intelligence, as we know, smartphones are advancing like crazy, and in other countries, right? In China and even in Africa, um, smartphone advancements are moving quickly. And you have some things potentially coming from OpenAI when it comes to a smartphone, right? You have automotive chips as vehicles continue to evolve. You have your electric vehicles, and the technology inside of these vehicles is absolutely mind-boggling. And so there's a major demand for those. And even if you look at some of the vehicles coming out of China, they're vehicles that are able to drive on water or drive in water, like boats, right? And so the technology is absolutely mind-boggling from an automotive perspective, and these chips are completely are foundational for that continued advancement. Um, and then the global rollout of 5G infrastructure, right? Each of these sectors, they rely heavily on advanced semiconductor technology, which showcase their vital role in the interconnectedness of the world. Benny talks about how we're all connected whether we want to be or not, right? We can't isolate ourselves, and this is one of the reasons why. And so let's talk about shares, market shares, right? Um, Taiwan Semiconductor stands out as a dominant player, and they hold approximately 53% of the market, right? This significant share is not just a number, it reflects the strategic investments and innovation that keeps it ahead of the competitors like Samsung and Global Foundries, two of the key competitors there, which have market share of 17% and 7% respectively, right? This competitive landscape, it underscores the importance of technological prowess and operational scale in driving success in the industry, right? So as we're looking at this full picture, really looking at operational success and what that looks like from a company and how we can continue to identify those those key pieces in a company that drive their success from an operational perspective, and as we talked about, from a um, future growth and evolution perspective, right? So, really, really important there is that operational success and being able to scale in the industry. Um, Advanced semiconductor nodes are another essential factor, right? The revenue generated from nodes under 5 nanometers, is seeing seeing robust growth, and that's spurred by demand for hyperscalers and fabless companies, right? This reflects a broader trend where cutting edge technology, meaning that the smaller the chips, right? They're trying to make them smaller and smaller so that they can put them in different things in different places. Um, this cutting edge technology is necessary to meet the needs of data centers and cloud computing. Be able to process more, um, and be smaller. However, it's not all smooth sailing, right? There are some headwinds here, right? The industry faces several challenges, including supply chain disruptions and geopolitical tension, and stringent export control regulations, right? As the tariff conversation continues to evolve. So these factors can significantly impact the operations and necessitate strategic planning and adaptability from companies within this sector, right? Because a lot of them are not in the United States. So capital expenditure is a critical area to watch. Taiwan Semiconductor has announced plans for substantial investment of $100 billion in capacity expansion, right? This move is indicative of the company's commitment to meeting the soaring global demand for semiconductors. Right. And finally, the competitive edge cannot be overstated. Its technological leadership and operational scale position it favorably in an environment where demand is accelerating rapidly, right? And this advantage is crucial as the industry continues to navigate its growth trajectory, aimed at amid various challenges. Okay. Excuse me. So looking ahead, right, we're now going to explore the financial performance of Taiwan Semiconductor, which reflects these market dynamics through its revenue, its profit margins, earnings per share. And this analysis will provide us with a deeper insight into how the company has capitalized on the industry's growth while maintaining its operational efficiency. All right. So, starting with the revenue, right? We've achieved a staggering uh $75.9 billion fiscal year 2024, right? Which is a 33.9% increase compared to 2023. Right? This growth is it reflects the robust demand for for the products and services, showcasing the strength of the brand and the market positioning. Right? And next, we'll highlight the net income, which uh, is approximated at $29 billion. These US dollar figures. And this figure illustrates the profitability of the company. Okay. And it also emphasizes their effective cost management strategies throughout the year because there's significant cost that goes into it, right? You have your capital expenditure and it's not cheap, but they're able to manage their costs to ensure that they continue to stay profitable in a major way. Um, and it's a testament to how they've been able to navigate the market challenges and still deliver huge value. All right. Gross and operating margins are also noteworthy, and they stand at around 40 and 35% respectively. Right. So those are their margins, gross and operating margins. So these figures indicate strong operational efficiency, right? Like I said, that's extremely important when looking at when doing your financial research on a company is what do their margins look like? right? And some companies they operate with extremely slim margins, and depending on the industry, it makes sense, but it can get difficult, right? Especially when you have ever evolving um, challenges from a market perspective, right? So these figures indicate strong operational efficiency, which is crucial in maintaining the competitive edge in an industry that demands both innovation and cost effectiveness, right? We're going to continue to challenge that as we move forward with the demand continuing to grow rapidly, right? Earnings per share is another key metric for investors, right? How much money is going to be returned um, per share, right? And it reached $6.25. This number is significant as it provides insight into the company's profitability on a per share basis, right? And further enhancing investors' confidence. Okay. Additionally, they have a dividend yield of 2.5%, right? So not only are you getting a great return per share, you're also getting a dividend yield of 2.5%. This metric it signals favorable returns for those who prioritize income for their investments, right? So you can develop a portfolio, a dividend portfolio, and this could be one of those that pays a pretty decent dividend for that investment, right? And it makes the stock extremely attractive for income-focused investors. Okay. And so looking ahead, um, forward guidance estimates revenue for Q2 2025 to be between 28.4 and 29.2 billion. Right. This projection suggests a healthy 13% increase quarter over quarter. Right, which is encouraging as they continue to build their momentum through the first half of this year. Okay. And then lastly, market valuation is represented by a PE ratio of 18.7. This indicates the market's current valuation relative to the earnings, right? Current valuation relative to the earnings, and it reflects a strong value. Um, I'm sorry, it reflects strong level of investor confidence in their ongoing performance, right? So as we transition to to the next discussion on the DuPont analysis, we're going to explore components that drive the return on equity, right? And specifically, we break down how net profit margin, asset turnover, and the equity multiplier contribute to the overall financial health. Okay. So, DuPont analysis, all right? Return on equity is what we're talking about here. Um, Return on equity serves as a critical indicator of a company's financial performance, right? This breakdown provides us with insight into the components that drive the returns, right? And first is return on equity formula, which is expressed by net profit margin times asset turnover times equity multiplier, right? And this encapsulates the various factors influencing the return for for the company. Okay. Um, so understanding this formula is essential as it highlights how operational efficiency, asset management, and leverage interact to create value for the shareholders, right? As we're looking at these investments that we want to add to our portfolios, right? So let's talk about net profit margin, which stands impressively at approximately 38%. This figure uh, underscores TSMC's operational efficiency and its ability to maintain pricing power in a competitive market, right? A high margin like this suggests that the company can convert a significant portion of its revenue into profit. And that's a critical factor in sustaining growth and funding your future innovations, right? Um, so next we'll look at asset turnover. The asset turnover ratio is around around zero point 0.7. And this is illustrating that while the company is effectively utilizing its assets, right, it operates in a capital intensive industry, right? I mean, tons of capital goes into getting started. And so high capital expenditures are typical in the semiconductor sector, right? Where advanced technologies and facilities are extremely crucial. And so this ratio, what it does is it indicates that TSMC is managing its assets efficiently, right? Despite the inherent constraints, increased cost in the industry, right? And so moving into that equity multiplier, TSMC registers approximately 2.8, right? That's their equity multiplier. This leverage helps amplify shareholders' return and reflecting the company's prudent use of debt. So they don't have a large amount of debt compared to their return, right? And so it's important to recognize that while leverage can enhance returns, it also comes at a risk, right? We know that. We know that when you have high leverage, there's a large risk there. And TSMC is able to manage that because they have such high profit margins, right? Um, but they're able to really strike that balance in employing leverage wisely to boost the return on equity without overextending themselves, right? They're not over leveraged, which is awesome in such a capital intensive industry, right? So yeah, that's an awesome piece to have. And then finally, combining the return on equity of about 74% is a testament to Taiwan Semiconductor's capital efficiency and the robust profitability, right? This is 74% is an impressive figure, not only showcasing the company's ability to generate high returns for shareholders, but also highlights its strong market position and their operational prowess, right? They're able to operate extremely efficiently in this industry. Right. And so as we transition to the next topic, we're going to talk about the stock performance metrics and valuation analysis for July 2025. Right. And this examination will provide us with a comprehensive overview of how these financial markets translate into uh, market perception and investor confidence. Right. And so stock performance. Um, it's crucial to understand how all of these figures they reflect the company's overall health and market sentiment, right? And so the metrics presented here, they illustrate a robust position for the company. And starting with the current share price, 226.49, um, this figure not only signifies a solid market standing, but also indicates investor confidence in their future growth potential, right? It's important to note that a strong share price often correlates with perceived stability and growth opportunities within the industry, right? The year-to-date return of 15.7% is another positive indicator, right? Suggesting that investors are responding favorably to their strategic initiatives and their market developments. This return can be extremely compelling, a compelling factor for new investors considering to enter into the stock, right? As it reflects both their current performance and their future potential. So next we have the price to earnings ratio, the PE ratio at 18.7x. This metric shows that Taiwan Semiconductor is trading at a moderate premium over market averages, right? Which can be justified by its growth prospects, right? So it's trading at a premium, right? Not an extreme premium, but it's trading at a premium um, over the average, which makes sense. Um, and this, like I said, can be justified by its growth prospects, right? A higher PE ratio often indicates that investors expect future growth. And in Taiwan Semiconductor's case, the semiconductor sector is poised for advancement, right? Poised for advancement and expansion, right? The PEG ratio is of approximately 1.2 further reinforces the narrative of justified growth expectation, right? This ratio accounts for the company's earnings growth rate and it suggests that TSMC is not just growing, but is doing so at a sustainable pace compared to its valuation, right? Sometimes you'll have you have companies that are are growing at an unsustainable rate, right? And there you get into some issues, especially um, in high capital markets where it is extremely expensive to play in that space, and they're growing at a rate that's not sustainable. In those cases, a lot of times those companies run out of money, right? That's not the case here with Taiwan Semiconductor, right? And then with the dividend yield of 2.5%, this also presents an attractive income opportunity for investors, right? This yield is appealing, particularly in low interest rate environments, marking the stock a viable option for income focused investors, right? And then finally, we'll look at comparative valuation. It's clear that Taiwan Semiconductor commands a premium due to its market leadership and high growth visibility compared to its peers, right? This premium reflects investors' confidence in their strategic direction and their operational excellence, right? You see a trend here of operational efficiency, right? It's extremely important for any stock that we look at, right? And it's extremely important for this organization as they continue to grow and expand. Um, so now let's transition into just competitive positioning, right? And we'll take a look at financial metrics correlating to its dominant market share in this industry. And some of these I might skip through. I'll share this full presentation with you guys because we're only halfway through. So, but competitive positioning, right? Um, uh, they've carved out a remarkable niche, right, in this space, and they dominate, and it's not just luck, right? It's it's really rooted in their strategic decisions and technological advances, and that set them apart from their competitors. And so, first, I want to highlight here just their dominant market share with 53%. Showcase their unparalleled industry presence. And this leadership, it signifies trust from customers, but also enables them to leverage economies of scale, right? Um, and this enhances their operational efficiency, right? And that economies of scale really allows for um, price and transparency, but also just the flexibility when it comes to pricing the high demand in the industry. All right. Um, and then just turning to the technological innovation, they've consistently been at the forefront, right? And they were the first foundry to produce a 3 nanometer chip and are currently advancing towards a 2 nanometer chip. Um, in the risk production phase. So this innovation is crucial as the industry moves towards smaller, more powerful chips, right? Driving performance improvement across various applications. from smartphones to supercomputers when you're looking at quant computing and things of that nature, right? We're moving into that space, that quantum space. Um, so a significant factor for their success is its strong customer demand, right? The firm counts high-profile clients like NVIDIA and Apple among its customer base, right? This not only drives demand, but also gives them a substantial pricing power, allowing them to maintain and even improve their profit margins. Um, Geographic diversification is another key strategy, right? They've invested in multi-fab locations in Arizona, right, giving them that United States presence. So when it comes to tariffs and things like that, they can shield themselves from that. Germany, excuse me, so stronghold, a foothold in the European market. Japan, and Singapore, which provide operational flexibility and mitigates risk associated with any single region, right? So this strategy is particularly important in today's volatile geopolitical landscape, right? When it comes to financial performance, they have gross margins of around 40%. This figure is impressive and indicates that it's outperforming its peers largely due to its operational scale and advanced production nodes, right? Those 2 nanometer chips. Moreover, they have a favorable demand pipeline, right? With strong capacity backlog projected through 2025 and into 2026, right? And it's not only reflects current demand, but also suggests confidence in continued growth of the semiconductor market, right? So some of these large projects that Donald Trump was going around the world getting funds for, right? In Saudi Arabia and some of these other spaces where they're putting a lot of money into AI infrastructure and AI development, right? Who are those chips going to come from? Taiwan Semiconductor, right? And so that pipeline going forward is very vast. And then competitive edge. They maintain its lead over rivals, like I said, like Samsung and Intel by consistently pushing the envelope in technology and diversifying its capabilities. Strategic positioning ensures that they remain a critical player in this landscape. And then it really allows them to continue to be forward thinkers, right? Um, let's see here. We're going to da, 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 da. We're going to skip a couple slides here and we're going to go to some of the trends impacting their growth. All right. Those are just some recent developments and some of their strategic investments, right? We're talking about the new fab locations, Arizona, Germany, Singapore to mitigate that global risk. Strong partnerships, market trends, right? Market trends. We have hold on 1 second. Oh, I lost my notes. Anywho, right? We have a surge in AI chip demand, right? Demand is set to double by the end of this year, right? By a staggering 45% over the next 5 years, right? Think about that. Double by the end of this year, and then 45% over the next five, right? The advancing of 5G infrastructure is going to be key, right? Accelerating that 5G deployment, boosting advanced silicone requirements, right? Enhanced market opportunities. And then the rise of that automotive sector, right? As those vehicles continue to evolve and change, and as even though that big beautiful bill is removing some of those EV incentives, right? That market is still going to move forward, right? In other countries, that's still moving forward in a major way. Electric vehicles and autonomous driving, and so semiconductors are going to be extremely crucial for those vehicles. And then you have a reconfiguration of the supply chain, right? Geopolitical tensions and CHIPS Acts, right? Incentives are driving kind of a reconfiguration of the semiconductor supply chain and where they develop, how they develop them, and then how they ship them, right? How they get to those markets, which is why them having those strategic locations in really each region puts them in a powerful space. And then a shift to specialized architectures, right? There's a significant shift towards specialized chip architecture, enhancing their specialized process nodes, right? Those smaller chips going into specialized equipment, even looking at the healthcare space, right? Another space that for the robots, for the processing of the information is going to be extremely key. So those specialized processing nodes are going to be extremely crucial and powerful as we move into this new phase, right? And then the balancing the cost pressures. So despite rising costs, they're able to leverage pricing power and volume gains to maintain their profitability, right? Um, Next, it's crazy. My notes disappeared. Um, mm, mm, mm. Risk factors and challenges. Risk factors and challenges. Um, these elements can significantly influence both operational effectiveness and their financial health, right? So underneath these risks is understanding these risks is essential in making informed strategic decisions moving forward, right? And this is going to be extremely key as things continue to evolve around the world. Um, so first, geopolitical tension, right? Particularly the complex relationship between Taiwan and China, right? Taiwan and China is going to be a key piece to watch as we continue to move forward. Um, and then alongside the U.S. export controls. Okay, these factors they threaten the operational continuity of the organization, but they also could jeopardize revenue channels, right? If the Chinese-Taiwan war, right, if that continues to become a thing, U.S. supports that, but they could cut off some of the supply chain there, right? Um, and it could jeopardize revenue channels and emphasize the need for more robust risk management. Okay, so right, so they're going to have to look at where the revenue is coming from, how they manage that because of this risk. Um, then a currency risk stemming from potential dollar depreciation. Right, a 1% drop in the dollar could lead to a 0.4% reduction in operating margins. Right? So understanding, as we look at it from a business perspective, understanding how these pieces come together, right? And how one small change impacts organizations at a pretty large percentage overall is important, right? And so this highlights the importance of hedging strategies, right? To mitigate financial exposure and protect profitability. Right? Then the capital expenditure execution, right? It's another crucial area of concern, right? Delays or cost overruns in construction of the fabrication facilities that could slow things down, slow down their growth trajectory. So ensuring that they're meticulous in their planning and execution in their capital projects, it's really, really important to ensure that they scale at the rate that they desire to, right? And then the cyclicality of the industry overall, right? It can't be overlooked. And so as we anticipate potential demand slowdowns in the second half of the year, which could lead to stock volatility, right? Um, it's vital for the company to prepare for those cyclical challenges and cyclical changes to maintain stability in their financial performance. All right. So looking at it on a yearly basis, how do they manage that slowdown each year? Okay. Um, Increased competition and rapid evolution of the technology space presents ongoing threats to their market dominance. So it's essential for them to continue to innovate and to stay ahead of both the traditional peers and emerging alternatives, right? And so overall, operational disruptions due to geopolitical risks pose significant challenge, right? Interruption to supply chain could have a detrimental effect on manufacturing and delivery schedules, right? And then the importance of diversifying supply sources and maintaining flexibility over their operational strategies. Extremely important. All right. And so we'll move into skip that one. This next is just a future outlook and earnings projections, which I'll skip. You guys will get this in a link and you can take a look at it in depth, but that just looks at earnings projections for the future. We'll look at portfolio theory, right? And risk return assessment. So it's important for us to recognize how all of these concepts they intertwine within the evolution of this investment potential and the semiconductor industry as it rapidly evolves. So we understand the associated risk and reward is extremely crucial here, right? Um, So the volatility, right? With a beta of approximately 1.6, this exhibits a moderate to high volatility, right? This characteristic might attract risk-tolerant investors who are comfortable with price fluctuations, right? In exchange for higher return, right? It's important to emphasize that while volatility can be daunting, right, it also presents an opportunity for strategic entry points as we look at those ABCD waves um, to be able to take advantage of that volatility, right? And then Sharp ratio estimated to be 2.5%. Uh, this figure indicates um, not only aims that they aim for growth, but they do so with robust risk-adjusted returns, right? A higher Sharp ratio signifies that the return on investment are well compensated for the risks taken. Okay, so they take that into account, which is key in considering when evaluating potential investments here, right? And so the diversification benefit of investing in TSMC are noteworthy, right? By adding them to the portfolio, we as investors we gain exposure to thriving semiconductor and AI sectors, and at the forefront of technological advances, right? We're able to see where they're going and also be able to then put us in position to make other investments as well, right? And so the diversification can help us to cushion against volatility by spreading risk across various investments. Okay. In terms of allocation, right, a prudent approach is going to be really important. Right, potentially looking at 10 to 15% of the portfolio in tech or growth sectors, right? Depending on how you allocate your portfolio, as we're looking at building this, this is one of the pieces that I'm really looking at is how large of a percentage do I hold here? Okay. Um, in this allocation, really looking to strike a balance between tapping into growth while managing the overall risk exposure. Okay. And so that's one of the pieces that I'm really, really looking at is how I manage that. And Benny and I, we talk about this all the time, how we manage that overall as we're building out these new portfolios. All right. Um, and then to mitigate risks, potentially those stemming from geopolitical tensions, right, and currency fluctuations, implementing somewhat of a hedging strategy, right, such as Forex sells in some of the areas, right, and options on ETFs that can be beneficial, right. So combining currency, stock, ETF to manage that the volatility there, right? That can also be a strategy that's beneficial. So these strategies, right? They're looking at how do we create a safety net, right? And it can allow investors to safeguard the position against unpredictable events. Okay, so some of the things that just really looking at and trying to figure out uh, in the structure of portfolios, right? Um, I know I'm giving you guys a lot here, and I hope you guys are following me. Um, but that's how we're starting to look at this: is how can we structure this that it makes sense and it gives us safeguards in the different areas and what that really looks like from an institutional perspective. All right. So that's the risk assessment and the theory that I'm working with here for Taiwan Semiconductors. Um, and here's just a strategic summary, right? Going over kind of all the things that we talked about, the drivers, specific strategy, and then balancing the growth and risk. Um, so that's Taiwan Semiconductors, right? Overall. So I'll open this up for questions, but I'm gonna pull up a chart. If you guys got time to hang out with me for a few more minutes, that'd be awesome. I'll pull up a chart. I'll mark up the chart. If you guys have any questions about anything that I just went over, um, feel free. I know I just went through a ton, but this is the depth in which we're starting to dig into these different assets and what they look like and how they operate to really understand this financial world at a different level, right? And we want to bring this depth of knowledge and information to you so that you can also start to look at it from this perspective and start to make some of these different strategic decisions as you're building out your own individual portfolios. All right. So the floor is open for questions if you have any, as I go through a markup of the chart so we can look at what that volatility could look like in strategic entry points. Seeing you got a question? No? Maybe not. If you're talking, I can't hear you. All right. So we'll on the monthly time frame, just marking out our levels here. Boom. All right. We're sitting at all-time high right now, trying to break through that level at 225 37. All right, so that's on the monthly time frame. We'll come down to the weekly. Boom. And those levels are essentially the same. Another support level here. Boom. All right. Cool deal. No doubt. So that's on the weekly time frame. I want to run a fib on this weekly as well, just to see overall long term where we are. Boom. So we hit an extension, right? On a weekly time frame, we hit an extension. We didn't take out the A, the extension achieved there. So we'll look for a retracement to come, right? So that's on the weekly. Let's go down to the daily. Look at there, right? And so those daily levels, we got some shorter term levels here. Boom, boom. We'll bring that down a bit to take into account. Bring that down a little bit to take into account that area there. We got support there. And then there. Boom. All right. So those are our daily support level there. Thank you. Appreciate it. All right. So now from a fib perspective, look where we are. Shallow retracement. We're just shy of that 118 level. Okay. Stochastic pushing up into that sell zone. Right. Weekly time frames. Go back here. Stochastic in the sell zone on the weekly also. Right. So do we get another push up into that 118, 127 zone to give us this reversal? Right. Then he was talking about um, the fall being a slower months for the market, right? And retracements potentially coming based on that analysis from Bloomberg. Um, so do we see this type of action come, right? So daily time frame potential 80-20 here. Okay, as pushes into that sell zone. We come down to the 4. And we will, let's see where we broke down. All right, the fib got taken out there. Run these off the low here. Oops. Okay. See where that went. There we go. All right. And we came back down, took out the A there. And so we're running these on the lower time frame. I'll mark this level from here. Okay. Oops. Boom. Boom. Fresh AB boundary on the 4. Okay. So if we push them to that 118, 127 zone on the daily time frame, right, that'll also give us an 80-20 on the 4-hour. Okay. So let's see how we close the week here and see if we can get a push or a run up over the next couple weeks into that 118, 127 zone in the next few days, right? Going into next week. 118, 127 zone. All right. See if we get an opportunity for an 80-20, get some consolidation and then a breakdown. Okay. So let's watch that there on the 4. We come down to the 1, and that's where we are. That's where we are on the 1, right? The boundary just shy of that 382. So similar story here, right? So sitting at high prices, we got um, stochastic overbought. So let's look for low prices to get back long, right? Overall, definitely see this stock continue to move to the continue to move to the upside, right? If you come back here to the monthly time frame and you look at your Fibonacci sequence, I want to see if there's a larger fib here. There may not be, but I just want to double check. Boom, there is. So as we look at this fib sequence on the monthly time frame, right? Evening star, boom, we got to that 382 level. Right. So from a monthly perspective, our matching extension is here. Boom. That's our matching extension, 276. Right. So nice opportunity to the upside. If we're able to get a low price here, right? Kind of coming back to where we broke out of this zone here, right? That evening star coming back to retest those levels potentially, right? 170. If we get a low price around 170, it's going to be a beautiful buying opportunity, right? Beautiful buying opportunity to run this up to 270, right? $100 price change right? Beautiful from just an overall stock purchase, right? If you're trading it on options, right? That'd be a beautiful opportunity. So we're looking for a low price to get back long, right? So we'll continue to monitor that there. Weekly, that the extension was, no, we already hit the extension there on the weekly. So I think we're poised for a pullback here, right? And we'll watch and monitor how deep that pullback comes. Uh, and then we'll look to take advantage of that retracement, right? That's a smaller fib there. Sub fib, there's an 80-20 there, right? But we have that larger fib sequence running there. Boom. That's the capital fib sequence there. Questions on Taiwan Semiconductor? Nope. Nope.
It's obviously a very good company, according to the information you gave us, is a good one to keep an eye on, I think, long term. So
Yes, yes.
thanks very much, Ryan.
Absolutely. You're welcome. You're welcome. All right. So we'll do. Appreciate you guys hanging out a little bit longer with me. What we're working on doing is one of the things that we're adding to our mission is as we're doing this research, we want to make our research publicly available, right? So we're working on figuring out how we implement this information um, into our platform. Okay, so I'm going to get all this information to you guys. I'm just trying to figure out how to structure it in a way that makes sense that we can do it consistently and make sure that it's readily available in an easy way. All right. But yeah, if you got questions that pop up throughout the day, drop them into the community. I'll be a little bit more active in there today. So yeah, you guys have a phenomenal Wednesday. Stay peeled on the charts, kind of listen to some of these conversations that are happening throughout the day today. You got um continued conversation about this big beautiful bill moving through the House and if they get the votes or not. So some things that could move the market. So stay peeled there, and we'll be back at it tomorrow morning, 6:30 a.m. Eastern Standard Time with my awesome partner, Mr. Benny Allen. You guys have a phenomenal Wednesday.